Hello guys, this is Wesley speaking. Welcome to Wesley Forex Academy. This is a new YouTube channel with the aim of educating lots of forex traders who are still finding it difficult in the financial market. So if you're here, I count you as a lucky one. Alright guys, so in this platform we offer secrets and tutorials on how to trade. We also give free trading signals. That is in our Telegram channel. We offer trading strategies and a reliable trading system. So guys, if after this episode you feel like asking me anything, you have any question, you're confused somewhere, and you want to ask me a question or inquire about something, feel free to contact me using my phone number. You can also chat me up on WhatsApp. You can also send me a mail using my Gmail. And don't forget to subscribe to my Telegram channel. You can also contact me from there, guys. So today's episode, we're going to be talking about how to trade using divergence. How to trade using divergence. Divergence is a price action trading strategy that you can use to trade whatsoever pair you want to trade. If you want to trade boom and crash, you can use it to trade boom and crash. That is synthetic indices as a whole. You can decide to trade it on also the currency market. So what I'm trying to say here is that divergence works for all pairs. It works for the currency pair, synthetic indices, that is boom and crash, and also volatility. It also works for Nasdaq, gold, or silver. It is. Alright guys, so straight to today's lecture. Now the main question here is, what is divergence? What is divergence? And I will simply define divergence as the disagreement between your chart and your indicator. You can see here it says divergence can simply be said to be the disagreement between your chart and your indicator. And then now you're gonna be asking, like, disagreement? What is this guy talking about? What's he trying to say? What is how my chart and my indicator being disagreement? Like, okay, don't just calm your nerves, man. I'm gonna explain everything to your understanding. Just calm and then sit tight. Fasten your belts, guys. Alright, so we have types of divergence. We have the regular divergence, which mostly signifies either a long or short-term trend reversal. So what I'm trying to say here is that regular divergence as a type of divergence mostly signifies either a long-term or a short-term trend reversal. We have two types of regular divergence. We have the regular bullish divergence. We also have the regular bearish divergence. And then the second type of divergence which we have is the hidden divergence, which mostly signifies trend continuation. As you can see here, the hidden divergence mostly signifying trend continuation. And then we also have two types of hidden divergence, which is the hidden bullish divergence and also the hidden bearish divergence. Today we are going to be talking about regular divergence. So this video is mostly going to talk about the regular divergence. Alright guys, so um on my next video I'm going to be explaining what the hidden divergence is. So for today, let's just focus on the regular divergence. Alright guys, so let's jump into the chart now. Yeah, not like really jumping into the chart. I mean, let's go to the chart now. But before that, guys, don't forget to subscribe to this channel if you like what we're doing, if you like our lectures, our trading strategies and everything. Don't forget to hit the subscribe button. Also like the video and drop a comment, guys. Um, so you don't need to miss any of our tutorial videos or strategy and whatsoever good you're posting. Also, don't forget to turn on the notification bell so that whenever we post new videos, guys, you get notified and then you come to watch it. It's nice you actually do that so you don't get to watch our video after 60 years of posting. Quite funny, right? Alright, guys. So let's jump to the chart now, guys. So perfect. So what pair is this? This is boom 500, boom 500 on the 1 hour time frame. So guys, as I was saying, I talked about divergence being the disagreement between your chart and your indicators. I don't really mean to say that your chart and indicators are gonna be fighting and struggling here and there. No, 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 no. This what I mean there was that your chart is gonna be telling you we have lower high followed by a higher high, but your indicator is going to be saying no, you have a higher high followed by lower high. All right guys, don't panic, calm down. You're going to understand all what I want to say here. All right, just check out this please now. Check out this. Okay, why am I going to use to draw this? Okay, check out this please. Maybe I should clear my chart, just clear my analysis and everything. Okay, now we have a clean chart. All right, check out this please here, guys. This is a high, right? a high. Then also check out this place. This is also a high. So this is more like a lower high, and then we have the preceding higher high. Let's connect that using our trend lines. Okay, this is perfect, right? Yeah, I did a good job here. Okay, so you can see that my trend line is going upward, right? Okay, so let's go down to our RSI. Let's go down to our RSI. Okay, this is also what we're looking at. So now check the RSI. Let's put this box here on this high. You know, the RSI is showing this high here, it's printing out this high here, and then this high also here. All right, so let's connect that using our trend lines on the RSI. Whoa, what is happening here? You see, it's kind of different. Yeah, this is what I'm talking about. This is what I mean by the disagreement within your chart and your indicator. There are other indicators you can actually use to spot divergence. You can use the MACD, you can use the CCI, you can use the stochastic, but I enjoy using my RSI period 14. Alright, so back to the explanation. You can see that on my chart I have a lower high here, followed by a higher high. But on my RSI, I am having a higher high followed by a lower high. So this is a divergence. This is a disagreement between my indicator and my chart. My chart is saying I want a lower high first, then followed by a higher high. But my indicator is saying no, I want a higher high first, followed by lower high. So this is what I talk about when I say disagreement. So this is a regular divergence. This is a regular divergence. And from the lectures we had earlier, we said that regular divergence signifies either a long term or short term trend reversal. Okay, let's take the trend now before this divergence actually happened. You can see that the trend was going up. But as soon as we had this divergence over here, you can see that the trend reversed for some time and then started going down. This is the 1 hour time frame. So you can see that the trend reversed after the divergence and it started going down. So the regular divergence that occurred actually gave us a hint that we have a downtrend coming. You understand? So once you spot this divergence, how do we take entries? We spotted this divergence already. So Wesley, how do we take entries now? Tell us. Calm down. I'm gonna tell you now. Taking entries using divergence, I use two methods, and I'm gonna teach you the two. I'm gonna teach you everything, guys. So I use my trend lines for my entries sometimes, while on the other side I use my 200 EME. That is my 200 exponential moving average. Okay, what I'm just gonna do is I'm gonna draw my trend line from this low over here up, up, up. I'm not gonna keep following the lows, just the low. I'll connect them into my trend line like this. Then I stop here. All right, let me zoom in so we can actually see what is happening. Okay, perfect. So I'm gonna connect the lows like this using this trend line. Then I am gonna enter once I see a break of my trend line. Once I see that the market has broken the trend line, then I'm gonna take my entry. So zooming in, okay. Let me just zoom in and then so you can see clearly actually. You see this candle, the little candle broke my trend line here. This candle actually broke my trend line. Let me show that with me. If I can actually change the color. Okay, so you can see that that candle actually broke my trend line. So immediately I spotted a break or my trend line has been violated, then I'm going to take an entry on the next candle after the candle that broke my trend line. All right, so my entry now is going to be on the next candle somewhere here. I'm going to take an entry here. Then where is my stop loss going to be? My stop loss is going to be above this high, above the most previous high. So my stop loss is going to be here, and then my take profit, I'm going to just look for the next support level as my take profit. So my take profit now is going to be either this first support level, that could be my take profit 1, then here my take profit 2, then here my take profit 3. And you can see that the market went down, 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 and hit all my take profit. Well, my chart is looking a kind of or slightly rough. So let me just delete some actually. Just delete some, delete some. Okay, so this is my entry line here. This is my stop loss. This is my take profit. That is my final take profit. So guys, let me use a rectangle to measure my risk to reward ratio using this strategy, and you're going to see that divergence actually has a very good risk to reward ratio. Okay, this is going to be my stop loss, my entry to my stop loss. So let me just make that range. Okay, then let's check out my take profit now. Let's check out my take profit. Like this. Minute please, I'm gonna be done soon. Alright, you're gonna see that actually my risk to reward ratio is almost ratio 1 to 4. That is, I'm risking $1 to make almost $4. Okay, exactly. So you can see that if you're taking my stop loss inside it, you see I'm risking at least $1 to make $4 to $5. So that is a very good trading strategy. A lot of people make money trading divergence only. So we checked that already. So I'm not going to delete it and then we move. Alright, so I expect you understand that, but let's check out another divergence. Alright, so this is another divergence. Is that really a divergence? No, it is not. Let's check. I think another one occurred just early this morning on Boom 500 exactly. Okay, perfect. So this is another divergence here. You can see we have this divergence here. You see on my chart we have a lower high followed by a higher high. But on my RSI, we have a higher high followed by a lower high. So that is a disagreement. That is an error somewhere. That is an error. So first thing you do, you connect your trend lines. The second you do, connect to an indicator. So you confirm that actually it is a divergence. And then another thing that you should know is that to make your signal stronger and then more reliable, so you should make sure that the divergence at least occurs on 2 time frames. If it is occurring on the 15-minute time frame, at least it should also occur on the 30 minutes time frame. And if it is occurring on the 30 minutes time frame, at least it should also show on the 1 hour time frame. Like, just make sure you see it on 2 time frames. Meaning, if it's on M5, you should be able to be seen on M15. If it is on M30, you should at least see it on H1, stuff like that, so you can know the signal is actually strong. So you can see that we have a divergence here, and then let's check our M30 to see if we can actually spot that same divergence. Oh, wonderful. You see, it also appeared on our M30. So because it appeared on a lower time frame, we are going to use that lower time frame for our entry. So as I said, I enter or take entries using my trend line strategy. I don't draw my trend line like this. This is safer. This is more safer, guys. This is very, very safe for me. So I just enter on the break of trend line. You see, this candle broke it over here. So I take my entry here. My stop loss will be placed somewhere here. Then this is going to be my first take profit. This is going to be my second take profit here, and then probably my third take profit here. See, but it looks like this trend line here actually gave us a late entry. As you can see that my risk to reward ratio from my stop loss to my first take profit is not really a nice one. I'm like risking probably $2 to make $1. So I'm going to check out my 200 EMA trading strategy. So let me just start my 200 EMA to my chart. Give me some minutes to exponential perfectly. That is it. So you can see that my 200 EMA is here. So I'm just going to take the M15 to see where it actually broke the market. All right, almost perfect. On the M5, my 200 EMA broke the market almost same time with my trend line. So it is actually a perfect entry for us. So I've already showed my entry. This is going to be my entry somewhere here, and then my stop loss is going to be above here. Then my take profit levels, I've showed that already. So let's look for for another setup. Let's look for another setup actually. And then also when trading divergence, you should at least to make it better, if it's a regular divergence that signifies a change in trend, it is best that you spot it close to resistance or maybe on a resistant level. So you could know that yeah, normally on a resistant level the market is expected to reverse or either break it. But when you're going to know that the market is going to reverse it, at least when you spot a regular divergence, then you can at least assure a short or long term reversal in the market. Understand? So you can see that here it was a perfect setup for us as our market was on resistance, and then it also gave a divergence. So gave a divergence. So our entry could just be here and then our take profit. I assure you that this market has a very high probability of reaching this level here. Has a very high probability of reaching this level. So let's check out other examples. See, by now I expect you already understanding what I mean by divergence actually. Now I'm trying to look for another example. Alright, this is another example over here. You can see what my chart is showing me here. Let me zoom in. Let me zoom in so you can see this. Perfect. So you can see my chart is showing me a lower high followed by a higher high. But on my RSI, we have something different. We have a higher high followed by a lower high. And then it's kind of, no, this is wrong. This is a divergence. So whenever you spot this, what do? You just sit calm, you take your trend line, you draw it, and then you wait for the trend line to be violated so that you can take your entry. Now you can see that my entry is going to be here. Why? Because that is where, or that was where my trend line was broken. You can either decide to put your stop loss above here or just above the trend line, like 6 pips away from the trend line. You can just put it above the previous high. So this was the previous high, the most previous high. So my stop loss will be somewhere here. Understand? Then my take profit I said could be the next before the next support level. So it could be somewhere here or even here. And you see the market actually reached those places after a lot of consolidation around here. So this is what we call a regular divergence. And as you can see that after it signified divergence, the market actually changed from an uptrend into a downtrend for some while actually. But this could be like maybe 2 or 3 days because this is on the 1 hour time frame. So that is what regular divergence is all about. I know you could be asking yourself, okay, what time frame should we actually look for divergence? I myself, I look for divergence from the M15, from the 15 minutes time frame upward. That is where I look for my divergence. You understand? Because the higher the time frame you spot the divergence, the stronger and the longer it is likely to last. You understand? If I spot the divergence on the 1 hour time frame, I could be rest assured that at least I'm going to get a 10 hours um trade in my favor. Understand? And if I can spot it on maybe the 15 minutes time frame, I feel like okay, at least I'm going to get probably 1 or 2 hour successful trade in that direction. This doesn't actually happen 100% of the time. That is why you just use your trend line to get safe entries, guys. So that is how the strategy works. If you have any question, do not forget to contact me. As I showed before, my contact details. This is it, guys. Do not fail to contact me. If you have anything to ask, feel free to contact me, guys. And then do not forget to subscribe to this channel. If you have any question to ask, I'm always there for you guys. If you also want me to, if you also want me to teach anything that you really don't really understand, you can also suggest that to me, and I'm going to do so. Don't forget to join my Telegram channel. Subscribe to it. You can take our signals and then grow your account, guys. Have a nice day trading, guys. I wish you all the best. Stay blessed, and Wesley is signing out.